Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, March 10th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, the ES is actually showing again another round of strength here. A very good round of strength. You can see that this expanding type of channel continues to be in play right now, and overall, since we've seen the strong turnaround on Friday, we've seen higher highs and higher lows day over day, and the current morning pullback or the overnight pullback here has been defended so far, and we're seeing further strength here despite yesterday's late day selling pressure. So right now, again, this ES hard to hold down. It continues to show strength here. It has pushed through the previous month's midpoint and the previous month's close, which has only the previous month's high as the next key level to test up here, which is the 39.59s. So again, we continue to see strength out of this market. We still have that pattern of lower highs and lower lows that is developing right now, but we're very close to breaking that pattern, which could open up another round of strength here. So again, the key level here to continue to watch will be yesterday's midpoint, 38.6375. Any failure to hold that by the end of the day could suggest a failure of this move. But right now, everything continues to show strength until proven otherwise. Additionally, we are through the top of this intraday key range right here, and we hit the 50% key level, and the next key level above will be 39.64. So we still have an upside move that could take us into 39.59 to 39.64 over the next several days. If we take a look here at the NQ, again, the NQ in tech has been hit a bit harder than the ES and the Dow. This one continues to show a downward trend in price here, very clear downward trend. It has taken out recent lows, and the bounce back has been pretty decent, but you now see this downward sloping here PEMA trigger zone, which is providing a bit of overhead resistance. If there were to see a rejection in this zone, again, it could lead to a pullback that could ultimately become a higher low and go, or it could be a pullback that leads to lower lows here into the 12.059 key level down below. But right now, again, the zone to watch here is going to be the previous session's high and the previous session's close here. If there's any rejection of that zone, perhaps we rotate back to the previous session's midpoint near 12.6. Otherwise, right now, the way it's looking, it looks fairly bullish at the moment, and above the previous month's close, that blue dotted line begins to open up more upside that could take us into the previous month's midpoint, which was the rejection point earlier this month. So again, right now, this market looking fairly bullish here after the turnaround yesterday, a big day yesterday, and now the early pullback this morning being defended for a push higher. Price now trading just above the previous session's high. Again, that zone could still be rejected for a return back to the mid, but as long as that mid continues to hold intact here, we may see more strength up ahead. So right now, showing strength at the moment. Any failure to hold 12.700 could open up a bit more weakness in the near term. All right, let's take a look here at crude oil. Crude oil is currently up 0.8%. In the previous session, we had a perfect pullback off the 66s for a move and a close below 64s. We were looking for a push into about 63 to 63.18. Today's low is 63.13, and that's important because that gives us a new range, key range to work with. So basically, we have this high right here, right there, which is denoted by that line. We have this low right here, which is this line right there, and then there's the midpoint right here, which was, I believe, 63.18 or so. We got that level here in overnight trading, and that's important because now that key range gives us new boundaries to watch for rejection and for targets down the way. Again, we've talked about how the rejection at the market structure edge is significant, and how if price can't get through that zone, we may be looking at a return back toward 59 to 60, maybe a return all the way back to value, which could happen fairly quickly. And again, this key range will give us those boundaries. At the moment, a 100% extension to the upside takes us to 76.72. A 100% downside extension takes us back to 50-50. And again, that would be in line with taking us all the way back down to the breakdown point or breakout point of 50 bucks. So this range is going to be very, very important here as we move forward. And now that it's in, we have it available to use over the next several weeks and perhaps even several months. At the moment, uptrend remains intact here. Very hard to argue with this uptrend right now, as any pullback into the PEMA trigger zone continues to be defended. And as long as that's the case, we may see another round of strength up ahead until proven otherwise. So right now, the fact that it's bouncing out of the PEMA trigger zone looks very similar to what we've seen here in the past and could lead to another round of strength. Let's take a look now at gold futures. Gold here, again, closed the day fairly bullish yesterday. It had a nice overnight rally, but then went sideways for several hours, 6-7 hours. And even into today's session, that sideways has continued to extend itself into today's pre-market range. We've gone sideways multiple hours at these highs now. And one thing you'll notice is, again, this bearish PEMA trigger zone remains intact. So even if we were to bounce a little bit higher, it could still be met with another round of selling pressure. At the moment, the short-term hold above 1700 is good. And in the short term, again, we could bounce even as high as 1740 or 1750 up ahead. The 1722 level is going to be very important. That has been an area of resistance here over the last 5 days. So above that level starts to squeeze a bit more. But again, it's going to have to prove it in order to continue to extend this thing to the upside. Otherwise, we may see another round of selling pressure up ahead once rejection occurs near 1720, 1730, or thereabouts. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.